Now, when it comes to the conversation of what the best dividend growth ETF is across the entire stock market, the name SCHD or the Schwab US Dividend Equity ETF gets thrown around quite a bit, and of course, for good reason. But what about ticker symbol DGRO, the iShares Core Dividend Growth ETF, also an ETF that offers low-cost exposure to some of the highest quality companies in the entire world? Not to mention this ETF has grown like crazy and also offers massive dividend growth too. Well, in this video, we are going to dig into DGRO or the iShares Core Dividend Growth ETF, see exactly how this ETF works, what the ETF has to offer, and of course, if or if not, the DGRO ETF does in fact have the potential to be named the best dividend growth ETF across the entire markets. Now, if you're interested in DGRO or dividend growth investing, make sure to stick around, drop a like down below, and let's get right into it. So right here on the iShares website by BlackRock, it says iShares Core Dividend Growth ETF or DGRO. It then says why DGRO. DGRO offers low-cost exposure to U.S. stocks focused on dividend growth. So for those that might not be all that aware of what dividend growth is, I'll explain it to you very, very simply. Simply put, dividend growth is basically how much a dividend grows over time. So if a stock or an ETF is paying $1 per share on a yearly basis, and then the following year it pays $2 per share on a yearly basis, well, that'd be some significant dividend growth, and without a doubt, that would definitely be important to keep in mind in regards to whether you want to invest in it or maybe not. It then says number 2, access companies that have a history of sustained dividend growth and that are broadly diversified across industries, and that also sounds super high quality. And then number 3, use it as your core of your portfolio to seek income. The investment objective then says the iShares Core Dividend Growth ETF or DGRO seeks to track the investment results of an index composed of U.S. equities with a history of consistently growing dividends. And just to get a snapshot of the performance that DGRO has seen over multiple time frames. But keep in mind, we are going to look a little bit deeper into this later, of course. You can see that on a 1-year time frame, looking at a 14.39%, a 3-year time frame 10.09%, and a 5-year 8.58%. And this is in regards to total return. So this is ETF price return, but dividends also included. So far this ETF seems super high quality. It seems to offer a lot of what dividend growth investors like myself are looking for. So let's dig a little bit deeper. Some key facts when it comes to DGRO. The ETF's net assets are currently at around $24 billion, which are right around half of that of SCHD. And throughout this video, I'll probably be comparing this a lot to SCHD for a few reasons. For one, SCHD is my personal favorite dividend growth ETF, and I own quite a bit of it. But for 2, a lot of dividend growth investors across the board do compare DGRO to SCHD as sort of a benchmark. Some more important facts of DGRO is the expense ratio is 0.08%, which is 0.02% more expensive than that of SCHD's 0.06%. Now, of course, a 0.02% expense ratio delta is not necessarily going to break the bank, but it still is something to keep in mind. Now, also very important when it comes to DGRO is to look at the holding breakdowns. What actually makes up this ETF? What's in it? What's in the highest in it, etc. Now, first off, this ETF has over 430 holdings within it, which I personally would consider that extremely diversified, which I love as an investor. And especially as I get older, I've noticed that I want things to be even simpler and more diversified because as life gets busier, I don't have time to be looking over my back in my portfolio on a daily basis. I want to buy into high quality ETFs and not have to worry whatsoever. And the reason why I think this is so important and why it's awesome that an ETF like this has so many different stocks within it, if 1, 2, 3, 4, or 5 different names in this ETF have a bad quarter or a bad year, the rest of the ETF's holdings most likely will pick up the slack. At least that's the idea there. Now we're going to look a little bit deeper into the overall growth of DGRO, but first looking at the dividend yield. It's currently offering around a 2.50% trailing 12-month dividend yield, which isn't the worst. It's higher than that of the S&P 500, but not quite as high as what SCHD is offering, for example. But the dividend growth rate is definitely there at 12.04% as a trailing 12-month dividend growth rate. Now this means year over year, the dividends have been going up quite substantially. And looking at the 3-year, we have an 8.76% and at the 5-year, 9.66%. So pretty much across any time frame. If you look at DGRO's dividends, they have been getting bigger significantly, especially for the holders that bought in years back. Now, this is of course very important, especially for someone like me that is a long-term dividend growth investor, because the way that I look at it, simply put, the money that you spend on something like DGRO today, you know that there's a good chance that the dividends that are going to be paid to you sometime in the future are going to be larger, which means you're going to have the wind on your back and you're most likely going to have a much easier time when it comes to building out a portfolio long-term that's hopefully going to turn into a compounding machine. So now that we understand a little bit more about DGRO, what the ETF is and sort of how it works, what holdings are in the ETF, and what the dividend looks like, it's time to get down to the real numbers. If an investor was to have invested $10,000 into DGRO back on June 12th of 2014, remember a $10,000 starting investment, that investor today, almost 10 years later, would have returned an average annual return of around 10.47%, which honestly I would be thrilled with. Anything over 8% in my book is pretty good. That's a total return of 156.23%. Now keep in mind, with dividends reinvested along the way, that investor would have been able to turn a $10,000 investment in just around 10 years to $25,615, which is a massive, massive return. Now this is of course quite substantial because think about the investors that bought into something like DGRO back in the day, and if they even just kept making small purchases along the way, they would have been able to compound a massive amount of money in a relatively short amount of time. But of course, I think it's only fair that we stack up the two dividend growth kings right next to each other side by side and see who is the true winner after all. If we were to have invested a $10,000 investment into DGRO back in June 12th of 2014 and the SCHD ETF in June 12th, 2014, the starting share price for DGRO would have been around $24.68, and the ending price as of right now is $51.09. Now, SCHD starting price back then was around $37.97, and now $71.47. Now, once again, this is with all dividends being reinvested. The total return, as we know, for DGRO was 156.23%, where the SCHD ETF's total return would have been 153.84%. Now that gives us an average annual total return for DGRO at 10.47% and SCHD at a 10.36%, which means just by a tiny portion within this given time frame, the DGRO ETF would have returned a tiny bit more money, just a few tenths of a percent more than SCHD. Now, of course, keep in mind this is just during one time frame, and honestly, in my humble opinion, I think either one of these ETFs could be a great investment opportunity for long-term investors that are interested in dividends and growth. But now I want to hear from you guys down below. When it comes to a dividend growth ETF, or just an ETF for that matter, that you personally buy into on a consistent basis, let's say even on a daily basis, which ETF makes it in your portfolio? Is it the VIG ETF? Is it DGRO? Is it SCHD? Or is it something else? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.